What's up, friends and family? Just thought I would show you guys how I kind of generate some passive income pretty consistently. So for those of you that don't know, in the stock market you can do a lot more than just buy and sell stocks. You can actually sell and buy what's called stock options, which basically gives you the ability to control a lot more shares of a certain asset than you typically would. So for example, if you sold a put, a cash secured put on, let's say, Amazon for a 220 strike, that would mean that you are putting up $22,000, so enough to buy 100 shares of Amazon at $220 a share. But to do that, or when you do that, you get paid a risk premium to do so. You're basically putting up your money as collateral for a period of time to buy the stock. So the cool thing about that is you get paid to wait, and whether you get the stock or not, you still get paid. So you definitely only want to do that specific example on a stock that you want to own anyways. But the cool thing is it's kind of like having a buy order and getting paid to wait, and whether the price actually gets there or not, by the time your option expires, you still get paid. So, but if the price does come there or lower, you'll get assigned 100 shares at that price that you picked, and you'll still keep the risk premium on top of it, which basically lets you buy the stock at a discount, because you probably would have sold that put under the price anyways. And if the price continues to come down, because you got paid that risk premium, the difference becomes your break even. So if you sold a 225 and let's say you got paid $350 to do that, then your break even would actually be closer to 220. I don't feel like doing the math right now, but you get my point. So this is a really cool way to make passive income, basically on a 30 to 45 day basis, so monthly. And I've been doing this with my members to generate about $1,000 a week in my taxable account, which is like another source of income. I mean, it's give or take, right? But $1,000 a week roughly equates to 52 grand a year. I mean, that's awesome, right? And you can expect more or less, right? But the thing I like about this the most is if you do it correctly and you do it on the right stocks at the right time, risk adjusted, it's the safest way to invest, and also will maximize your returns because you're going to get stocks at a better price and buy at the right times. So you may be wondering how I do that, and that's a loaded question, way too much to try and tell you in a video quickly. So what I thought I would do is create a tool for free for everybody to use if they so choose, to actually be able to take advantage of this. So we'll go ahead and jump into it. You can see on my screen here the Own It Lower is what I called it, Own It Lower app. It's going to be part of Leaving the Matrix. I might make it like a subdomain. I'm not sure where it's going to be yet. This is a local instance for now because I'm still developing it. But basically the way this works is it actually scans 600 stocks that I have selected, and most of it's the S&P 500, but these are companies that are profitable, trading at a discount, and there's different factors. I don't want to spend too much time going into this, but basically stocks that meet my criteria for selling puts, and then it scores them and actually gives you on any given day, every 15 minutes, the best option contract you can take advantage of. So if you look here, we'll go to see today's best setups, and you can actually see that you can filter by setup score, by symbol, quality, discount, IV rank, which is blank for now because it needs 40 days to populate, and I'm developing this, so this is day one. And then I can show you your annualized return roughly if you sold puts at this level up to this point. So you can see in this case, if you sold puts on AVGO, you'd have had a 44% annualized return executing this strategy when this criteria is met, which is amazing because AVGO, for those of you that don't know, is Broadcom. It's like one of the top 10 companies in the world, and they're a very big part of the AI infrastructure build out. So, and if we actually go look at AVGO here, you can see that the most, I built this chart here to try and help you guys out. The most traded zone, so this is where the most buying and selling has happened, is this green bar here. And you can see that currently price is just above that level, but your discount, so your break even, actually ends up under the average price paid for Broadcom, which, assuming that this keeps appreciating, that basically tells you that if you do get assigned, you're getting the stock cheaper than most people that bought it did, okay? Which is already great, and that reduces your overall risk, right? Like, you have more margin of safety than the average person. So that's kind of what you want to look for. So we can look at 3 months here, and you can actually see, in this case, in the short term, the spot price is actually under the most traded area, meaning that the stock is currently discounted. So you can use a lot of different information on this screen to help you make a decision whether this is a good stock for you or not. So over here on the side, it has the happy to own it either way or premium only options. Now, premium only means you don't really want to get assigned the shares. You're just trying to suck the premium out of it in that window of time. Basically get paid to have your money up as collateral and reduce the risk of you getting assigned. So that works, but you'll get less premium, right? You get paid more risk premium the more likely you are to get assigned on the stock. And getting assigned isn't bad, right? Like, if you want to make money long term and you want to invest long term, you do want to own shares of good companies. So that's why cash secured puts are my favorite, but you've got to do it on the right companies at the right time. So this tool is here to help you do that. So anyways, moving back to this here. So we'll do the either way here for this example, because I'd be fine with just farming premium or owning AVGO at this current level. And I think I'm going to include a chart here, and I'll show you why. So I have an indicator here. So you see this giant bar. This shows me this is where the most traded zone on this stock is, and you can see it's pulling back into that. So there's a good probability that you're going to see buyers right in this area based on historical data, and the company is still undervalued and still performing well, which we'll go back to that in a second. But this is actually a really good time to sell puts, and I know that because I can see that the stock's oversold on the RSI down here. I can see the MACD is well below the zero line, so we're clearly in a downtrend, which is going to raise the risk premium on the options. Buy low, sell high, right? Like, you have to be willing to buy and be like, not get the absolute bottom, but if you want to make money, like, you have to buy the red. Like, I know it's like super obvious, but you got to know when, right? Like, they say that if you just continue to buy stocks in a long term, you'll do good. That's not necessarily true with individual stocks. There is definitely, it matters when you buy them. So, but in this case, this is a really good setup for Broadcom, and the premiums are elevated because earnings is like a couple days away. So I wouldn't mind owning a company like Broadcom before earnings, but I do think that there's a good chance on earnings it'll actually come down to this line, scare everybody out, and then start to go back up again. That's how the market makers do it. It is what it is. But either way, anywhere down here, I would be comfortable owning Broadcom. So I'm going to add some sort of chart in here just for an extra layer of confluence. But you can see here, it meets my size criteria. So it has a $1.6 trillion market cap, so it's a very big company. Cash flow, they have $27 billion in free cash flow. Their balance sheet is 74% debt to equity, 0.74 debt to equity, sorry. So they have less than 1% of their cash or their value is in debt, which is great. Their balance sheet is very healthy. Earnings is 85.4% and revenue is 47.9% annualized. That is exceptional growth. Okay, so you're already getting, the fundamentals are rock solid here, and the stock's in a discount zone already. You can see that by seeing the most traded area and the fact that the spot price is under that. So this is all good stuff, and that's because the whole semiconductor space right now is in a pullback. So I personally buy stocks when they're pulling back to front run rotation, so then when the market rotates money back, because this is how the market works, right, this will start to run. So, like, I'll give you an example. I think September will probably be a pretty ugly month because it typically is, and we're in a midterm year. But what does really well in that climate is often value stocks. So something like McDonald's does really good in times where growth maybe isn't. And what you'll notice, right, is McDonald's is deep deep in a pullback in a correction right now, but you can actually go look historically. Anytime you buy it under the 200-day moving average, it's been a really good time to buy McDonald's. And there's nothing wrong with the fundamentals of McDonald's. So these are the opportunities that I look for. I'm not telling you what to buy and sell, just trying to give you an example. So anyways, going back to Broadcom here. Basically, you can come to this screen, and it will actually score for you the best options on any given day to sell and how many days out they are based on all the criteria that I use to sell premium. So in this case, for Broadcom, and I know this isn't going to be a great example for everybody because it's an expensive stock, but you could sell the 320 put expiring September 25th, right? And that would require $31,000 in collateral, right? And I know that sounds crazy, okay? I understand that. But you're getting paid $615 to have a buy order sitting at $320. So if we go back and we look at Broadcom, you can actually see that 320 is way down here, right? Way down here. It's the bottom shelf of this volume. So if you got assigned, and I really doubt you would in this case, because boy would that be discounted for a company like this. But if you were to get assigned down here, like you're sitting at the absolute strongest support on the stock, so you're buying it at the most optimal time if you get assigned. If you don't get assigned, basically you're putting up 32 grand and you're getting paid $615 to just put $32,000 in the bank, right? And that's it. If 45 days or 30 days in this case, if 30 days passes, you get paid $615 and you get your collateral released. You get your $32,000 back, and that's it. So you made 615 bucks on 32K, which I don't know what that is in percentage. Let me do that real quick. I'm gonna do this wrong. I always do this wrong. 615. That's not right. That's not right. 615 divided by 32. Okay, so you're getting paid roughly 2%. Sorry, I did it backwards for a second. You're getting paid 2% on your 32 grand to just let it sit there for 30 days. That blows a high yield savings account out of the water, okay? And you're getting paid a risk premium to buy one of the best companies in the United States at a severe discount. That would be like off of all-time highs. That would be almost a $200 discount on Broadcom, which is insane. Right? So I use this all the time to make money. And in 4 months, I haven't had a losing position doing this. And I'm not saying with Broadcom specifically, but this technique. And so this tool helps you find the stocks to do this on at any given time. So when you have money available to do this, you can use this tool and always find the optimal thing. And if you're wondering, okay, well, I don't have 32 grand to do that, right? You can actually come in here and you can filter by collateral, and then you can just look, okay, so in this case, you need $2,000. Let's find one. So this has a high score of 80, right? It's got a curated setup score of 80, okay? And it's in a pullback, which is good because we want to buy it at a discount. And this score is largely based on fundamentals, so it's out of 100, so 80 is pretty good. We can actually look further here, but you can see you only need $2,200 to do this. So you can click on this, and you can see, all right, the spot price is literally sitting right at the most traded area. So if you sold an at-the-money put right here, you're going to get paid an optimal amount of premium. You get assigned where most people have been buying shares anyways, right? And it would actually have to come down to where these gold areas are for you to break even, right? Because you're getting paid that risk premium on top of buying it. So this is a really interesting setup as well. And you can see, so in this case, it's recommending the 23 strike, 23 days out. So that's September 18th, right? And you're going to get paid 40 cents per share, right? So it's 100 shares, so multiply by 100, you're going to get paid $40 for this. So you put up $2,200 as collateral in 23 days. Over 23 days, you make 40 bucks. And that doesn't sound like a lot, and it's I mean, you can do more than one contract, right? So you can do 40, 80, 120, whatever, right? So it's 100 shares for each time you do this. And that is part of like, if you come in my Discord, I'll help you figure out like the right amount for you based on your account size and all these things like that. But that's something that you personally have to decide what you're comfortable with investing in each of these companies. But so I'm not really looking into this company right now, but I'm just giving an example again. So if we make $40 on 2260, again, that's almost 2% over, what was it, 23 days. So in 23 days, you're generating a 2% return. Now you're like, okay, well, that's still not a lot of money. Okay, let's think about this. If you did this, if you went for, and I typically target 1% a week, which means over 4 weeks, we'd be looking at 4%, right? But so if you were making 1% a week for 52 weeks on your entire portfolio, you're talking about a 52% return annualized just selling options. Now, obviously, there's going to be a time where you're going to get assigned, if you let it happen, that is. You're going to get assigned, and you may momentarily be down on the position because the price may come under where you bought at. But you got paid a risk premium to do so, which still lowers your average cost, hence the name Own It Lower, right? And then, ideally, if you're buying good stocks, they will appreciate over time. So you got paid to buy it low, and then you get to let it run, and the stock appreciates as you were expecting, right? So if you're doing this on good companies and the economy and the corporate earnings are still healthy, then this works. It's the least risky way that I've found to generate consistent income in the market, and I absolutely love it. I swear by it. It's my favorite thing to do. It's not going to generate you the most outsized returns because a lot of times you're not going to get assigned on shares. So you keep the risk premium, but then the shares go and run off without you, right? So you got to weigh out, like if it's discounted enough, sometimes it makes sense to just buy it and then maybe sell puts on top of that as well, right? So this is my favorite strategy. Now the catch with this strategy is that you kind of need a good amount of money in your portfolio because the better companies are going to have share prices, $50, $60, $70, $80, $100 typically. Price doesn't really mean anything. It doesn't associate with the value of the company, but that's just generally how it is. Like Uber is a really good one to sell premium on when it's in a dip because for whatever reason it has an IV like 75, so the premiums are higher. But it's a super strong company, an incredible company, and it's been discounted for months, and I've been selling premium on that. I was getting like $470 every 45 days off of like $7,000 of collateral. So I did that for months, got assigned a couple times, great, want to own it anyways, right? So I generated like $2,000 or $3,000 in premiums, and now I have a position in Uber that's like 400 shares, and now Uber's up 20%. So I made a couple $1,000s selling premiums, and then also made another couple $1,000s from the stock appreciating. So now I'm sitting up about 20% on my position, and I made all that money selling premiums, so my net overall position is literally up like 40% in a couple of months on a stock I want to buy anyways, and it hasn't even really run yet. So I could spend hours talking about this stuff, but the point is I created a tool here that finds you the stocks that are ideal for this. So you don't have to guess. I'm taking the guesswork out of it, and I'm showing you the best opportunities in the market on any given day. It's got a 15-minute lag, okay? But you can come in here and see, risk adjusted, the best opportunities in the market today. And I showed you Broadcom because today it's Broadcom, right? But there might be another example, and there is some features I want to add. Like, so one reason Broadcom's coming up is because the premiums are elevated right now, but that's because earnings is in like a week, which is technically a risk. Okay, so you need to be aware of that. So I'm going to add a feature here that shows, it's just like a warning that says, hey, earnings is coming up, just so you know, which a company like Broadcom, that doesn't deter me. In fact, that's just one more reason to do it. But it depends on the company. But yeah, so you can come in here and you can see, like, literally by score and by like the amount. So IBN here, you only need $2,800 to do this one. So this would be a good one for almost anybody. Spot price is currently under the most traded area. Your discount your break even is like almost $2 under the spot price, which is incredible on a $30 stock. That's like a 10% discount, right? So this is going to tell you to sell, and it's telling you to sell 0.27 delta. So the delta here is your percent chance of getting assigned. So you have a 27% chance of getting assigned on this contract. That's what that's telling you over 23 days. So you have a 73% chance basically that you're not going to get assigned, and you're going to get paid $25 to just put your money up as collateral. Again, I probably wouldn't take this one because $25, that's like really low credit. I just clicked on a random example here. So you got to pick and choose, risk to reward, right? And this will give you the best stocks based on fundamentals and trading at a discount. But from there, you have to weigh out, so when this IV rank area populates, that will actually give you, the higher the IV, the more risk premium you'll get paid, but the more chance of volatility in the stock, right? So you have to kind of weigh out that sweet spot for you. I like 50 to 70 IV. I'm okay with a little bit more volatility, but some people might not like that and want more stability, so they might want to go for lower, 20 to 30. So these are all things that I'll teach you if you come join, but I'm telling you, for 4 months, here, I'll show you on my phone here. This is a very impromptu way of doing this, but so here's just a quick, you see all that green? I'll scroll again. I know you guys can't see it, it's really blurry, but you can see those are all wins, right? That's just selling options. And the cool thing is you don't even have to wait for them to expire. So a general rule that I have is if 50% of the time has passed and the option has depreciated by 50% or more, just close it early. Why take on more risk for that extra time? You already got 50% of the value in less than 50% of the time. So just take it, close it, and be done with it. Right? And it's situational, but as a general rule, if you don't know, if you follow that, you'll be even more consistently taking in profit, right? So anyways, I thought I would share this with you. This is a really, really good way that you can make truly passive income. I mean, it is, you push a button on your phone and just sit there. And our win rate in the Discord is I think, on trading in general is 92%, but with options premium farming, it's 98%. And the ones that I've lost on were covered calls, and that's because covered calls are a bit different. Instead of putting up money as collateral, you're putting up your shares as collateral. And sometimes I don't want to lose my shares, so I'm willing to take a loss on my covered call because I'd rather keep the shares. So I'll take the loss. And you might be wondering, well, why would you sell covered calls anyways? Well, because it's kind of like a hedge, right? If the market's getting kind of dicey, so sometimes it makes sense to do that to cap your drawdown, to protect yourself. So anyways, there's a lot that goes into this stuff, but this particular tool is something that anybody with a little bit of education could use and take advantage of and add a consistent income stream to their lives. You could do it with as little as $5,000. You could do it with hundreds of thousands. The more money you have, the faster this will compound, obviously, right? So I have the Discord account is currently at 123,000, but I really switched over to doing primarily this once we hit the six-figure mark in that account. And in the last 3 months, we've generated $14,575 just from selling options. It's virtually no risk. There's always risk, right? You get assigned on a company and something really bad could happen with that company. That's possible. That's why you make sure you pick the best stocks, and this tool helps you do that, right? It's giving you AVGO here because look at the fundamentals. $1.7 trillion in market cap, in valuation. I'm going to add the PE in here too. I think that would be good information. So price to earnings, so you know you're getting it cheap versus its historical valuation. I can tell you right now that this is cheap. Cash flow, $27 billion in free cash flow. Exceptional. I mean, it's amazing. Balance sheet, less than 1% of their balance sheet is debt. Awesome. Earnings growth is almost, it's double digits, freaking almost 100% earnings and 50% revenue growth year over year. And profitability is, their margins are like 39%. This is a A-plus company, right? And you're getting it at a discount, which is why it's scoring it this way, okay? So the tool reduces your risk because it's screening for stocks that make sense to do this on at this given moment based on fundamentals and real drivers of stock price. Not hype, not noise, but earnings and growth, which is what ultimately always drives stocks. And that can be proven if you go look at any stock over time. When they start to separate and diverge from each other, that's when you make opportunities happen, right? And currently, Broadcom, if we had a picture of their earnings would be like this, right? Like way up here, accelerating. Meanwhile, the stock has diverged, right? So I would not be surprised at all to see it tap this liquidity zone and then start to build an uptrend and start to very quickly accelerate towards its earnings window. I don't have them here. I guarantee you that their earnings is up into the right. I'm not going to show you. I'll just show you because why not? So there's forecasted prices. You can see at the bottom here, there's their forecasted earnings per share, forecasted revenue. Like the business has not slowed. You can see quarter over quarter, it is up and to the right. So the business is accelerating. And you can see by 2029, they're actually estimating their earnings per share to, wow, almost quintuple from here. Once again, this is an amazing business to buy, and now is a great time to be doing this. But with this particular stock, to sell puts, you need $300,000 or $35,000 to sell and at the money right now. So, but one bonus tip for you, and then I'll let you go. See, if you're into leverage products, 2x leverage, nothing crazy, right? You could actually go for something like AVGO 2x, which has decay on it, so you have to understand how leverage products work. But you can notice that this chart looks very similar to AVGO because it follows AVGO's price movement, but it's 2x the daily price movement of AVGO. So it has time decay on it. That's the only thing. So you have to look out for that. But this is the same. This is leveraged, right? So if AVGO moves 2% a day, this will move 4% a day in either direction. So you have to understand that. But you notice the shares here are only $39, so you only need $4,000 to do it here, and you're essentially buying the same thing. The only thing with a leverage product is you need to eventually sell it. Like you have to have a plan to sell it because of that decay. Over time, over a long period of time with a 2x leverage product, you will start to lose money against the underlying. But in most cases I've tested with blue chip stocks with a 2x leverage ETF, it takes over a year for that to be true. So in this case, right, like you're buying well below all the moving averages. You're getting it at a heavy discount. Conditions oversold. All of the fundamentals are in the right place and trending the right way, and you're getting paid an extra risk premium to do it. And then with a 2x leverage product, you're going to get even higher IV, so even better premiums, right? So you can make a lot of money in this case with very little. And I can tell you, I just sold a put on this exact thing. So what I did was I sold a find it here. I sold a 35 put, and I got paid $180 to do that. So I put up $3,500 as collateral. So, and I got paid $180 to do it. So that's 5%. That's 5%, and it expires September 18th. So I'm getting a 5% return by the 18th. And the only case where this goes against me is if the price of this particular asset falls to underneath 33.20 is where I would start losing money. But I'm holding the stock. So even if that happens, I don't care, because long term I expect the stock to appreciate it, and I got it at a discount. I might not have nailed the absolute bottom, but I got it at a huge discount, and fundamentally the company's doing great. So eventually, as long as the market stays healthy, it will catch fundamentals and it will go right up, right? Anyways, hopefully you guys learned something here, but also I just wanted to invite you to try this out. I'm going to post it as a subdomain, I think, of Leaving the Matrix. It'll be free to everybody, and hopefully that'll encourage you guys to try out some of the tools that I'm making for the public, and maybe come sign up and learn some more and change your life. So, hope you enjoyed. See you soon.